All right, we're excited to be here with Mark Brennan. He's the CEO of Cerrado Gold. Mark, thanks so much for being with us. Mark, you have some of the most dramatic production growth in the junior mining industry planned over the next few years, but that's really only half the story. So can you tell us about the potential you see in the unexplored and underexplored parts of your land package?
Sure. I mean, I guess with regard to Brazil, we're growing that asset very strongly. Since 2018, when we had zero resources, we're now at 1.3 million ounces. We've only done about 40,000 meters of exploration drilling. We now have on the property 3 rigs that will be focused exclusively on exploration drilling to drill 25,000 meters by the end of the year. So that'll be the first step of hopefully taking our 1.3 million ounces up to 3 million, 5 million ounces as we move forward. Very rapidly behind that in Brazil, we're looking to be into construction by the fourth quarter of this year, into production early in 25, if not late 24, and then generating a lot of ounces and growing those ounces through additional ounces that we're finding on the exploration programs. And that's not alone. We also have Argentina, where we've taken our production over the last 3 years when we acquired the project from 22,000 ounces to 43,000 ounces to 50,000 ounces, 54,000 ounces. This year we're going to do about 70,000 ounces. Next year, 90,000 ounces. So both projects are still very young, very mature assets. With lots of upstream. They're discovery assets, even though they're in production. They're moving to production.
So it sounds like you're still in the early days in your understanding of your Argentina deposit, even with production over 50,000 ounces a year. Should we assume as you better understand the resources, how you tackle it operationally will change?
You're absolutely right. And it's very important. I mean, a lot of people lose sight of this, and I try almost every time I talk about Argentina to really emphasize to people, it is a startup. If you look at our presentation, we have a slide that shows kind of how we're moving with the heap leach and the underground and the open pit, and how it compares to on a timeline with Cerro Vanguardia for Anglo, or with Cerro Negro with Newmont, or even Yamana's property, the Cerro Moro. And basically what we're saying there is that we have yet to determine the best strategy, the overall strategy, how much heap leach we're using, how much open pit we're using, how much underground we're using. And we haven't even really gone underground at this stage. So it is still a startup. We hope by the end of the year that we'll be able to show a lot more information, that a lot more intelligence to show exactly where the strategy is going in the life of mine plan.
Now, as the manager of this company, say you have continued success and you're able to raise the money you need to bring these projects on that you're talking about and generate attractive returns, would you continue going it alone? Or if a big player came in and wanted to partner with you to some extent, are you open to that type of opportunity?
Yeah, I mean, it's a very good question. As first of all, I'll just say that we don't need a lot of capital as it relates to building a mine. I mean, if we're talking about $125, $130 million of capex, as the PA was, basically we probably means we need about 150 million, working capital and et cetera included. So basically 150 million dollars, to build a mine that's going to generate, $150 million a year, is not a significant ask. And I don't expect that the feasibility is going to be as strong as the PEA. I think it'll be still exceptionally strong, but probably not as strong as the PEA. But in terms of we've been talking to private equity, we've been talking to banks, we've been talking to advisors. The reality is that we have a lot of interest with the economic metrics that we're expecting. We don't see capital as being a challenge for us, and that's combined with the fact that you'll have seen in the press release when we did a stream with Sprott. They've indicated that they'd like to take a significant position as part of the construction budget to enhance their position in the company. So I think in terms of the utility of bringing in a big partner to fund the project really isn't required. Now, as we expand, I suspect that we're going to generate a lot of interest from majors, and in terms of probably wanting to look to acquire the project. And our view here is that we have a fiduciary responsibility to shareholders. We're not here for for job retention. We're here to maximize shareholder value. And the fact is, if we get the right price, like everything in life, it's for sale at the right price on the right terms. So we're very open to that possibility.
Now, I wanted to talk a bit about your team at Cerrado because I know you guys have been working together and have a history of working together successfully. Could you just talk a little bit about your team and your background and what you guys have worked on in the past?
Yeah, I mean, I think the team actually kind of came together, through when Anglo built Jacobina in Brazil, and Jacobina has been a tremendous success, and really it was one of Yamana's best properties, and it's the reason largely I think that why where Pan American Silver bought Yamana for I think 1.5 billion or something, or possibly higher, 5 billion or something. But in terms of the reason for the team started working on that project. Ultimately, during a really bad downturn between 98 and 2000, Anglo shut it down. They sold off all the assets. They were mining it as a 1 meter narrow vein, and we decided to dilute it and mine it as a 3 meter wider vein, diluted, but at the same point still very profitable to mine. And we created a company called Desert Sun, of which I was one of the founding members, and that's how I met the operating team that we have now. And so between 2002 and 2006, we restarted the project, and we sold it to Yamana for $700 million. The team then left, and they came. We found a project in Vanadium called Largo. Largo is the world's highest grade, richest vanadium deposit, and the most profitable vanadium mine. And basically, we took that from scratch in 2007, and I was there. So we had the whole team together until about 2015 when I left, and then these other guys left, and when I started up Cerrado in 2018, they all came and we're back together again. So that's on our operational team. We have a team also in Toronto, more on the administration side and the project development side, who I think are first class. And so we've got a really great group of guys who've made a lot of money for shareholders and who know what they're doing. We're builders. We like to build projects. We like to develop them. We're not afraid to sell them either.
Could you address a pushback you often hear from investors, Argentina and the currency controls there? You've told us privately these really don't worry you as you develop that asset. Could you explain why?
If I look at Argentina, the Argentina is a very, very rich country for mineral resource. And right now, it's tough to find those mineral resources. No matter where you are in the world, the Congo, Africa, everywhere, the reality is that mineral resources they're still around without a doubt, but you're going to more and more esoteric areas to find deposits that, historically were pretty customary. And so it's getting a lot tougher to find resources. In Argentina, you have tremendous endowment of resources. The problem has been and continues to be its macroeconomic governance. And basically, there's a very high inflation rate of about 80 to 100%, depending on who you speak to. But on top of that, they have currency controls. Now, currency controls doesn't mean you can't bring the money out, but if you want to bring it out, it's very expensive, which perhaps means you're not going to bring it out. So in terms of, we got involved in Argentina during a period where they had removed their currency controls, and they brought them back just before we finalized the acquisition of Argentina, because the purpose for us for buying Argentina was to be able to fund Brazil. So even when they brought in the exchange controls, we determined that the asset was sufficiently attractive that we would keep Argentina and we'd complete the acquisition. But basically what would happen is that Argentina would fund itself. It would not be funded through equity that we would raise in Canada. So the way I look at Argentina is a bonus for shareholders, in the sense that we're not getting any credit for it, in my view. It's not costing any value. But again, we've grown that operation from 22,000 ounces to now 70,000 ounces. we're looking for a longer term, mine life of around 80,000, 90,000 ounces. That'll generate a lot of cash. Now, there's a November election in Argentina, and our hope is that within 18 to 36 months of that election, that we will see currency controls removed. And if that happens, then you're going to see just a big push into Argentina, because it does have amazing resources. It's just been, unfortunately, it's been difficult for with the macro policies for investment.
So that's a potential catalyst. If currency controls go away, is not being priced in currently, that could be a positive catalyst if there's regulatory change.
So if the regulatory, and we're being approached by people in Argentina, sophisticated companies in Argentina, industrial companies, engineering companies, that basically want to get into mining all of a sudden. And the reality is that I don't know why they want to do that, but I suspect they have their ear to the ground a lot better than I do in terms of the politics there, policies and opportunities there. So that's one thing. The second thing is that if you think about it, there are a lot of major mining companies in Argentina right now, Barrick, big companies who are generating a lot of cash. Newmont, Anglo, Pan American Silver. The reality is that if you look at the fact that it's very expensive to export your dollars, so you probably don't do that. You're looking at an inflation rate of almost 100% per annum. The reality is you can't sit on that money. So what I envisage happening is I envisage that you're going to see a lot more. Another catalyst is that you're going to see a lot more M&A taking place. And because people have to use this money, otherwise it just disappears. And so the reality is that I think what is going to happen is you're going to start to see a lot of these companies. First of all, they optimize their own operations. Second of all, they grew their own operations. But the next step, which I think is around the corner, is hey, we're going to go and buy other operations that we can expand and grow. In our Argentinian operation, we have 333,000 hectares. I think that's about the size of Rhode Island. It's a big land in a very prolific belt. If we can show this asset to be approximately 90,000 ounces, 100,000 ounces, at a cost of less than $1,000, that means we're generating, a substantial cash flow. The reality is that would maybe make it onto the radar of a major company that it wouldn't do if it was in a different jurisdiction. So even if we don't see a change in macro policies, I think there may be a catalyst in terms of the world of acquisition that would be attractive to us, as opposed to just growing the business. There's always the option to just continue to grow the business, grow it on itself, and then see how time evolves and what happens down the path.
Mark, the other pushback we hear from investors is why the recent acquisition of a vanadium and iron project in Quebec when your core assets are in South America?
Yeah, I mean, some of the people were a little bit, it was a little bit of a change of direction for a potential gold company to be buying a bulk asset. The reality is it's not really. First of all, if I look at Lac Minerals, which is now the assets of Lac Minerals are largely the Barrick assets. Lac Minerals began as a gold company. It was a gold company, but it made all its money from aggregates. IM Gold, up until recently, was making all its money from niobium. And so I look at now, most of the gold companies are now becoming very large copper producers. So that whole argument that we saw historically about premiums for gold companies has really kind of disappeared. So that's one component. And I look, for example, at the potential for companies to diversify with the right assets, and I look at Teck. Teck are producing copper, they're producing gold, they're producing other metals, but they're also producing coal. And a large significant component of their value is coal. And so people kind of look and say, well, so I don't think it's as big of a divergence for a junior company as potentially one may consider. But that said, we will still remain a gold company until 2026 at the earliest. We will not start construction of Quebec until 2026. The logic behind Quebec was this: it's a phenomenal asset. The value opportunity that we get is a strong one for Cerrado. It's also a good one for Voyager, because we did have opportunities. Voyager did have the opportunity to go and fund itself, but it would have diluted the heck out of itself. And with a little bit of progress, that asset is going to be worth a lot more money. The second thing is that what's interesting is that we start production in Brazil, in 2025, where we should generate, at a minimum $150 million a year. Our capital component for building Mont Sorcier in Quebec will be about 150 million of equity, 150 to 200 million of equity requirement, which so puts us about a year of cash flow from Brazil. In exchange for that year of cash flow, you have the potential for $350 million a year of cash flow for 20 years. Now, if I combine the two companies and I forget about Argentina, I look at a company that's generating about $500 million of cash flow, US, and it'll cost me basically 30 million of equity now to build Brazil, and then I can use cash from Brazil to generate $500 million a year of cash flow. Well, the reality is that how much is a company that generates 500 million of equity of cash flow worth? Conservatively, I'd say $2 billion US. From $60 million market cap US where we are today, in 5 years' time when we could see Quebec go into production, we could be worth 30 times more than we are today. We're about, and the other thing is that we've been offered lots of assets in gold and in lots of different areas, lots of different elements, but there's nothing that we've seen out there that's attractive. We've seen mediocre assets that have been offered to us, particularly in the gold space, for what would be half our market cap. It's not going to happen. That doesn't make any sense, right? And so what we see now is a path where within 5 years, we could be a $2 billion US company without a significant amount of risk or dilution. We know Mont Sorcier very, very well. It's a very easy project as the world goes. So the reality is that, we may not ever develop Mont Sorcier. That may be spun out. It may be something else may happen. But if the course of action that we take is that we end up with a $500 million company with very limited dilution to our shareholders, that's not a bad thing for shareholders.
Sounds like you're in the business of making educated bets on potential high return projects, not sitting by and collecting a paycheck, which is refreshing to hear. It also sounds like this asset gives you flexibility. You can develop it or sell it for a higher price down the road.
Indeed. I mean, the reality also as a junior company is, we have to look at the long-term potential of the company. If somebody comes and acquires us, that's great. But if they don't, we have to look at the long-term longevity and what happens in Brazil if we don't find any more ounces. We have an 8-year mine life or 10-year mine life. After 5 years, guys are going to go, okay, what's next? Well, here we have a what's next. It's not a big risk. It's not a big outlay in terms of our capital or shareholder requirement. I mean, it's what would be 1 year of cash flow. For an insurance policy for generating $350 million a year, I think it's a pretty good bet.